one thing you can guarantee with the stock market is that you will not be changing any boilers. there,
Yeah.
there will be there will be no boilers to change. Nobody will phone you to say, "Hey, cut like this boiler's packed in, and you need to phone your insurance company if you're lucky to have one or whatever." Right? What's your first name and where are you calling from?
My name is David, and I'm calling from Warwickshire.
Hi, David. Okay, so how can we help you today, David?
So I'm just calling just to see if what I'm thinking to do in the future is sort of the right sort of thing for me and my family.
Okay, talk to me about
Um,
that.
so currently, we're both working full time, average salaries. Um, we have managed over the years to get two houses as buy to let,
Okay.
but with all the taxation from the government and stuff like that, it's not really yielding much month to month, and we feel like it would probably be better if we was to sell them both
Yep.
and reinvest that money into the stock market.
Mm-hmm.
Because obviously we're aware it's not guaranteed, but over time, over like the last 100 years or whatever the statistics are,
Yep.
been at 8 to 10% return.
Yep.
So we feel over the long term, 10, 15, 20 years, our money and will be better
Mm-hmm.
in that investment vehicle.
Mm-hmm. Okay. So the properties you're talking about just now, are they? Talk to me about them exactly. So are they regular buy-to-lets, or are you doing something a bit more complex with them, like a HMO, or what are you doing at the minute?
No, they're just straightforward vanillas. So standard buy to let.
Mm-hmm.
They have a loan to value of 75%.
Yeah.
I've got long term tenants in,
Yeah.
good tenants, stuff like that. It's just obviously like this month we've got to replace the boiler on one of them,
Yeah.
and that's basically taking out the whole year's. It's probably going to cost us money because by the time we pay tax
Yeah.
and stuff like that on it, we will be out of pocket.
Yeah. Okay.
You
And how long have you had these properties for as well?
So I've had the first one since 1990. No, not 99. Sorry. Since 2007.
Okay.
And then
Okay. Yeah.
second one 2016.
And how much, in terms of equity, do you think you've got in both of them at the minute?
I would say it would be around. If I sold both of them after paying the tax, what I think we'd probably have to pay, I think it would be around about 100 to 125 left over.
Okay. This is after you've factored in potential capital gains tax on the properties not being your principal residence, yeah?
Yeah. Well,
Okay.
it's a bit of a grey area because they were at one time our residents.
Right.
So, from my understanding, I might be wrong, that some of that gains taken off from the years that we were living in them.
Mm-hmm. So,
Um,
yeah, with that, you definitely need to seek some, I guess, more detailed advice, actually, just to make sure that you're paying what's necessary when it comes to selling that property. And you'll come to you when you come to speak to your solicitor and so on. If you do go down that pathway, it will be clear what needs to be done. Now, the thing I want to just zoom out on real quick is just talk about the idea of buy to let versus stock market. Obviously, with a buy to let, this is you're in a property business, and with that comes a lot of potential issues, as you know, one of which is that you're dealing with stuff like replacing a boiler and so on. And as you would know, with the stock market, do you currently invest in the stock market?
yes, I do. Yeah, I've got a small amount in there at the minute.
When you say a small amount, what just
But I suppose it's relative to everybody. But I've got about 5 grand in there at the minute.
5 grand, yeah?
Yeah.
Okay. So you've got 5K investment in the stock market, and you've got about 100 to 125K equity into buy-to-let properties. Do you own your own home out of interest, David?
Yeah.
Okay, so you're a homeowner as well. So, I mean, look, if I was in your shoes and you've owned these properties for a long time, and by the sounds of it, they've become less and less profitable just due to various changes that have been happening, yeah?
Yeah.
Okay, so if I was personally in your shoes, I would first of all have a chat with your partner. I think you mentioned, I got a sense you've got a partner as well. You're doing this with. Have a chat with them first of all, to just get a sense for, are we at that stage where we may want to let go of these buy-to-let properties? That's the first thing I'd begin with. And if you both come to a sense that, you know what, we're open to doing that, then from my personal experience of, what the stock market can offer you, the stock market has historically, depending on where you invest, let's say you invested in the S&P 500, for example, the Standard & Poor's 500, largest companies in the US equities market. I mean, I've been looking more recently at how our investments have been performing in the S&P that we've had for many years, and even more recently with so many people expecting the stock market to crash and what have you. The stock market has carried on performing. One thing you can guarantee with the stock market is that you will not be changing any boilers. there, there will be there will be no boilers to change. Nobody will phone you to say, "Hey, like this boiler's packed in, and you need to phone your insurance company if you're lucky to have one or whatever." Right? Like there'll be no one to bother you with that, but you are guaranteed that your money will be working. Now, the stock market, the thing to say about that is that it's not a like the silver bullet in that, like, yeah, it will always perform. I have to always say, your capital is always at risk when you invest in stocks. Stocks can go up and down, but historically, provided you've got a long-term perspective, which it seems you have with your property investments, you've been there since 2007 and 2016.
Yeah.
If you have that long-term perspective, the stock market can perform really well for you. If, say, you chose, for example, the S&P 500 index to invest in, and you are conscious of fees. For example, if you looked at certain funds at the moment will cost you only 0.07% in ongoing fees. Most of them are actually quite cheap in terms of what it's costing you. And if you do it inside of a tax-free environment like a stocks and shares ISA and so on, for example, you stand to really see your money working over time. So in fact, I was reading an article yesterday, a funny title to this topic in the Financial Times, about, the decline in the property market at the moment that we're experiencing with, lots of all these changes you've highlighted, as well as the fact that interest rates remain really high and a lot of landlords are considering alternatives. Now, if you had said to me, David, that you are exploring other strategies like a house of multiple occupation or other things, then there may still be a potential for you to still be okay in given the current market. But because you're doing a straight buy to let, if I was in your shoes, I'd consider very strongly the potential for my 100k to 125k working in the stock market. I mean, I'm just sitting here real quick. I'm going to look real quick at a compound interest calculator whilst I speak to you. If I just popped in, I'm just going to assume £100,000, right? And let's assume that this returned on average, let's say 8% over time. I'm doing this literally live as I'm speaking to you. And let's say we're compounded. How old are you, David?
39.
39. Okay. So let's say, let's do this over the next, say, let's say 20 years, right? Just hypothetically, right? And let's say that, with this, you invested, how much you think you could invest per month, just monthly of your own money out of your net income into the stock market, in addition to your 100k? Any amount at all?
Yeah, I've worked it out already. I reckon we could do around about £400 to £550.
Cool. Let's say you did £400 a month, realistically, right? And I just kept everything flat, as in it's not rising with inflation. I've just kept it flat. I mean, I've just calculated real quick, looking here at my compound interest calculator, that in 20 years, you'd be sitting at £728,288 with your 100k initial investment, £400 per month invested over 20 years. The total you would generate in compound interest and growth in that portfolio will be around £532,288, with additional deposits from your £400 a month being 96k over that 20-year period. So, you'd be sitting on almost £750,000, obviously all things being equal, right? We're thinking long term, we're assuming an 8% return. And bear in mind, like I said before, no one's going to ask you to come and change a boiler or or to deal with any repairs. So, on the face of it, and bear in mind, past performance never informs the future. On the face of it, it would seem that it would make sense to strongly consider the merits of the stock market investing. You could even try it with one property and see how you go, because you've got two of them. If I was in your shoes doing it, I would begin with the property that's giving you the most hassle, or or I'd pick one of them. Maybe the one that.
Because we were thinking of, like, obviously, because we've got two, doing one in each tax year.
Yeah.
And then, like I say, to see how it goes, like I say, with the first one. Mm-hmm. But because it's a large amount, and I'm aware you can only put 20 grand in at the minute.
Into an ISA. Mm-hmm.
There's going to be a lot of money left over into the next tax year.
Yeah, because there's two of you, so you got 20 grand each, that's 40,000. And, when you've exceeded that tax-free amount, you can use a general investing account to invest your money. So an alternative is to use a GIA, which is another type of account. That means that your money is still invested, but any gains in that account will be subject to tax, basically. Yeah. So a lot of people tend to do that. You could also combine that with a lifetime ISA. You're 39 years old. Have you opened a lifetime ISA yet?
Not yet, but I'm aware if I want to, I need to do it in the next couple of months.
Yeah. I was just going to say, you need to hurry up. Like, don't waste time. And with that, you will know that if you invest up to £4,000 a year, you get up to £1,000 put in for you from the government. So it would seem to me that if I was doing this, I'd do 16k into a stocks and shares ISA, 4k into a lifetime ISA. That gives me total 20k. And then I get additional 1k from the government. That's total 21k. And if I repeat that with my partner, that's 42,000 invested in one tax year. Then rinse and repeat for the other tax year, or use a general investing account.
Yeah, I think I'll have to look into the general investment account.
Yeah.
Yeah, thank you.
Has that been helpful?
Yeah, it has, yeah. I just needed, because it's hard, because I don't want to let the tenants down and stuff like that, because they're good people.
Yeah, I hear you completely. And there's that human side to this whole thing, which is with property, you're obviously dealing with human beings, whereas you and I have just done a logical, straightforward, numbers calculation, but you now need to deal with the emotional side of that, the human side of that, which is that you've been providing housing to people, and you may need to reconsider your decisions because it's currently not working out for you financially.
Yeah, the best decision for the family is probably what we spoke about.
Yeah, I hear that. But look, I'll let you make the decisions with your partner. The whole point of having this call is just to have a chat with somebody who could just have a chat with you as though you're having a chat with a financial coach or somebody of that nature. Feel free to read our book, by the way. I don't know if you've got a copy of it, but it's called Financial Joy, available on Amazon and Waterstones and all of that. We go into a lot more detail about the stock market and investing and all those things, assuming you're a complete beginner and what have you. So yeah, do check it out if you haven't got a copy already.
Thank you very much, Ken.
No worries, man. Take it easy. We'll speak soon, okay?
Okay, thank you.
All right, take care. Bye. Wow, what a call. That was actually really awesome. I really enjoyed having that chat with David. This is a really, I'm gathering the sort of question we're going to get a lot more people calling about this. Should I be carrying on my property investing, or should I potentially focus on the stock market? We've obviously just, almost scratched the surface when it comes to this dilemma. But one thing's for sure, listening to his question, he will definitely not be dealing with anybody phoning him to have boilers changed or anything changed for that matter. if he was investing in the stock market. That's not to say that you shouldn't invest in property. Property is not for everybody and requires a great deal of just really understanding your financial goals, understanding various strategies, having a decent appetite for risk, not being over leveraged. There's just so many things to consider. If you are somebody who wants to learn more about all those things, read week 9 in our book Financial Joy. I'll link to it below and above, where we cover 6 detailed strategies. And in week 7 in our book, again, we cover the stock market extensively and how we invest in the stock market, all the different strategies and approaches, as well as answering all your important questions in there as well. But other than that, hope you enjoyed today's video. Do please subscribe to our channel, show some love for the work we're putting here, and share this video with other people who might find it useful. Take care, people, and as we say, in all things, be thankful and seek joy. Bye for now.